Morning and welcome to the latest Moretti in a catch-up. Last week we spoke about credit control with the CEO of Chaser, David Tuck, which followed on from insolvency with Martin Willett the week before. So today what we wanted to do was continue the theme of management of cash. So I called in a favour from Mr. Invoice Finance himself, Mr. Ian Hayes. So welcome, Ian.
Morning.
Have you got a
drink right there? Say again, mate?
Bring a drink.
Not today, mate. I think it's just a little bit early even for me. So this.
Yeah, I must admit, I got the Scarborough warning this morning off the marketing team not to start bringing a load of beers down and things like that. So it would apparently not be the right look for what we're looking for. So there we go. But what would your choice have been, Ian, if you did have one?
I would have gone for
Guinness. Part of the dark stuff. Yeah. Very good, very good. I knew you.
That would have been my choice, maybe. Yeah, it's. I'm being sensible.
Just that touch early. So, right, brilliant. So, well, thank you very much for your time today. It's really good of you. I do appreciate it. So, would you just like to set the scene? Tell us a little bit about you, your background, and why you got into Invoice Finance.
Yes, no problem at all. Yeah. So, as Phil says, Ian Hayes. So, I work with Bibi and across the Yorkshire region. I've worked in finance for about 24 years altogether, believe it or not. I don't know. Thanks for saying that. We teed that one up. Yeah, so 24 years in total. 17 of those were with the major high street banks. And then the last 7 years, I've worked with Bibi, who are the largest independent invoice finance in the UK, and they're a family-owned business. So, yeah, I guess that's it, really. As far as why I got into invoice finance, or how I got into invoice finance, as I say, a lot of years working in high street banking, and the kind of latter bit of that was a customer facing role in branch. I'd heard a bit about invoice finance, now it works, it's quite fast paced and kind of putting deals together for businesses. I made an effort to find out more about it, and the rest is history, really. So yeah, about 14 years ago, I got into invoice finance, started with one of the big high street banks, and yeah, now I'm with Bibi. Going a bit further than that, I guess, is my family are pretty much all in finance. So I'm one of five children.
Yeah.
My eldest brother left school straight into banking, and then the next two straight into banking. Me and my twin brother straight into banking and finance. So it's a bit of a family tradition, really, and something that my young three boys, 6 years and under, 6, 3 and 1, if they're not end up playing for Leeds United or Leeds Rhinos or playing cricket for Yorkshire, they might be. So family finance as well. Yeah.
So family full of bankers. Yeah, I heard people say that or something along those lines. Anyway, but yeah. So tell me a little bit more about Bibi's then. You say it's a family-owned business, and yeah.
Yeah, so family-owned business, owned by the Bibi family. Largest independent invoice financier in the UK. So the kind of stat that we normally talk about is outside those big four high street banks that have obviously got their bank portfolios that they can dip into. We write 1 in every 2 transactions outside those big four. And quite impressive, really, to say we don't have that bank of customers to dip into. So yeah, it's a family-owned business, but it's a very big business. So I kind of describe it to people as it's a big, small business. So it's kind of got the personal feel, the family feel. Sounds a bit cheesy, but the Bibi family bit, the family feel does run through the business, and it's how we interact with our customers as well. But yeah, local office network, so very prominent in the UK, but then we've got offices across the globe, quite big in Europe, some offices in Asia. We were in the US until recently. We've sold that business recently, but yeah, it's a family business. But it's a big outfit in this industry.
Sorry, someone just got in my way. I couldn't see you for this big silver trophy. You don't know what it is, do you, by any chance?
Oh, I'm not sure, mate. I think you might have to explain a bit more about that, mate. It's a darts champion, I think.
Is that a darts championship? Is that what it is? I think it is, isn't it? So we came and won your Yorkshire darts charity darts tournament earlier this year, didn't we? I watched the documentary about Tiger Woods the other day about one of the greatest sporting comebacks of all time. I think ours would rival that very man weekend the year before. But we learned our lesson and not going out at 10 o'clock in the morning and starting and then trying to play darts at 6 o'clock at night. So yeah, I just thought I'd bring that up because you obviously do quite. And the whole point of it is that Bibis are quite. They're a company that really is heavily involved in charity work as well, isn't it?
Yeah, lots and lots of charity, and that's always been a big thing for the business. I don't know the figures, but it's hundreds of thousands of pounds given to charity, and to all staff members. There's an offer of, I think it's £1,000 a year that they will match up to. So if you raise some money for charity, Bibi, for every single staff member will match up to £1,000.
That's some serious global enterprise. So that's impressive. It just shows that the sort of the caliber of the company that we're talking about, which is obviously one of the reasons we got you guys on here, because we do try to associate ourselves with the best, and you guys certainly are one of those. So that gives us a little bit of background. Thank you very much about you and about Bibis as well. So one of the things, obviously, this Moretti and a catch-up session all came about as a result of the COVID pandemic. So I just wanted to touch on a few areas around that. So how was the landscape prior to COVID coming out for you guys? What was going on in the world of Invoice Finance?
So prior to COVID, I guess as is, and you know, the general landscape for us as Bibi, by the way, that is, as a company UK-wide, Bibi generally transacts about 100 new deals a month, 100 new clients a month. And that's fairly steady and has been for a number of years now. So pre-COVID, it may have been a slightly slower start to the year than previous years, but it's always difficult to tell as you kind of come out of Christmas, and January sometimes is a bit slow to get going. But yeah, general rule of thumb, Bibi as a business, right about 100 new deals a month, new clients a month, which will vary massively in size and shape and complexity. But so pre-COVID, it was kind of ticking along as was and as it normally is. As soon as that COVID period hit, I think as it did for everybody, and as I'm sure it has for you guys and your clients, it all changed. A lot of our clients shut up shop immediately, took advantage of furlough scheme. So we just saw turnover drop off a cliff, which, you know, our clients' turnover is our turnover. So the amount of money that we have out the door dropped quite quickly, as clients either stopped trading altogether or were just trading at very low levels. That has kind of continued, being honest, up until now. So again, not unexpected at all, but I think whatever the furlough scheme is in place, we expect that our turnover will be down as clients' turnover's down. Some of our clients are finding it tough out there at the minute, and we're trying to help where we can. Whether that be with fees or whether that be with overpayments, increasing prepayments where more cash might be needed. But yeah, it's been tough. And as we stand today, you know, as a business, we're still performing very well. We're still putting a lot of money out the door. We're still writing a fair chunk of deals, 50 odd a month as it stands in a minute. So, you know, it's still a big lump, albeit it's not where we normally are. So it's slowed down. It's starting to show signs of picking up a little bit at the minute. But again, my thoughts personally are, while the CBILS and BBILS government-backed schemes are out there, that especially at the lower end of our deal spectrum, it will be quieter.
There's like a huge false economy though at the moment, isn't there? I think in a lot of people's minds, because, you know, people are looking at the bank accounts, and a lot of people's bank accounts, we go into our zero systems, we use a piece of Xavier, we can tell what's in people's bank accounts on the latest rate, and the numbers look particularly healthy. But they look particularly healthy because there's a 50 grand loan in there generally as a minimum, because I think just about nearly every business owner's taken one of these bounce back loans, and so they should have done, assuming it's for the right reasons and so on and so forth, and it's repaid and can be repaired because it's the cheapest form of money you're ever going to get. But then they've also got things like the VAT debts that got deferred, so big VAT repayments gone in. They're getting support on furlough. They're getting you know, tax support in terms of payment terms and all those sorts of things. So I think there's a bit of a fear for me, particularly, that at the moment there's just this little bit of false sense of security where I'm all right because I've got plenty of cash, but you have. but that cash is soon going to diminish and it's going to have to go out the door at some point. So I can imagine that's probably another contributing factor as to why it's a little bit slower than than it would be normally. So I suppose when it picks up and that money starts to run out, I suppose there'll be more conversations to be had for sure. And I suspect at some point it'll actually become untenable in the amount of work that you're going to have to do as people start to realise how much this bites. So,
yeah, and I think that's exactly it, Phil. That's exactly what we're expecting. It's kind of going to be, this is the calm before the storm, and that's not kind of a throwaway comment. All the factors that are involved here from previous experience. I know there's been nothing like COVID as such, but 2008 was a similar experience. History tells you that this industry, invoice finance, the numbers of users of invoice finance will grow massively, and that'll be for varying reasons. Being completely honest about it, that will be because there's some people, and I guess this is what today's about a little bit, that have perhaps never considered it or perhaps poo-pooed it and said, I'm not interested in looking at that. And often it's because they don't fully understand it. So, facts are there'll be people that have never used invoice finance before that will need cash and cash flow that we will see. And because of those stats we said before, 1 in 2 of every transaction outside the big 4 banks is written by Bibi. We'll see it. We'll see a lot of those.
Yeah, no, I mean, that's the thing. So yes, I think you made a valid point there. There's going to be a lot of people who never considered this before, like you said, poo-pooed it. So, when we've talked to clients about invoice financing and stuff like that, there's a bit of a negative perception around the use of invoice financing. So people seem to think that it shows that they're a small company. It shows that they've got poor cash flow. It shows that they're weak in eyes of their their customers and their creditors. So what's your sort of, and that's for me, that's a historic viewpoint. And it's not the modern world. You should use invoice finance. So what do you think about the perception of that, and how do we go about changing that perception of invoice finance?
So, as I said before, I've done this for getting on for 15 years now, and it's split pretty much 50-50 between a big high street player, a high street bank player, and Bibi, the biggest independent. So I've kind of seen a varying type of customer, your typical bank type customer, and your typical Bibi type customer. There is a difference between the two. We will look at those transactions that the bank will look at, but being completely honest, and I guess if any of your clients are watching this, if your facility can and could be placed with your bank, it's probably the best place for you. And there's no denying that. We would obviously like to look at it as well. We've got an example at the minute where we are, and when we do get to look at those nice vanilla bank type deals, we are in that arena, the same pricing arena, where we will be a bit different to the bank is our flexibility, which I think we'll come on to a little bit later, so I won't go on about that too much. But the perception I've seen from a bank type customer and a Bibi customer or prospective customer, we do get a lot of the same things. What I would say is over those 14 years or so, it's definitely disappeared, or it's disappearing. So once upon a time, you would get it every meeting that you went to, especially if you go along with the bank manager, you'd be met with crossed arms. I'm not interested in this. People think I'm going bust if I use invoice finance. That perception for me has definitely gone away, and you hear that very, very little now. But it's used by huge businesses. It can be. We do offer confidential facilities. People are worried about confidentiality. We do offer facilities that are completely confidential. So if you're concerned that your clients, your suppliers may be affected by it, which I don't think is true, genuinely from experience, we can offer confidential facilities so they would never know. But it's a great tool that can help cash flow, can help growth, can help in times of difficulty. And I guess some of the headline bits that we hear, you'll hear invoice finance companies talking about, we'll offer 90% against each invoice, 90% against your debtor book. That's a big lump of money. And if you think about it, a lot of the time within a business that's perhaps not even considering it because they've either never heard of it or they just don't know enough about it or they've heard something negative about it that's incorrect. that could be the biggest asset in that business. You know, if you've got a debtor book of £1 million, you've got £900,000 that you could draw down on. It's widely used for acquisitions for that reason. But people think, you give me 90% up front, right, so your charge is 10%, then I'm not sure we can stick that. It's quite a big charge. Our charge obviously isn't 10%. We prepay 90% up front. The remaining 10% is passed to the client when we receive the 100%. Our charges, typically speaking, it's difficult to say because it's different for everybody, anything from 0.25% and generally no more than 3%. But that will obviously depend on size of business and workload required, etc. But a lot of things that you do here, people hear that headline of 90% and presume we take 10. People think that if they look at a facility that involves us getting involved in credit control, we aggressively chase customers, and that might annoy their customers. I guess sometimes it's putting that into common sense. You know, I can only speak for Bibi, but being the biggest player out there that continue to grow, if we were upsetting your debtors, your customers, we wouldn't have a business. We wouldn't have a growing business. So we understand that that's, you know, that relationship that you've got with that client is key and is important. So if we are charged with your credit control, we'll make sure that we liaise with you and we do it right, and we're an extension of your team to work with you to collect debts when we think we should be collecting them in. And as I say, if you really don't want us to get involved with customer interaction, we can scale that back and back and back to doing less and less, depending on what you want, tailor it to your needs.
Yeah, no, I mean, it's a great tool, and it's something that we're going to utilize on the back for particular clients, for part of our full finance function, because one of the things we're starting to do now is to do credit control for people as well. So again, there's a nice intermediary step between us working with it. There's a finance function and supported by guys like you. And I think the other big thing that's changed, like you said, I think you talked about it earlier on in that sort of statement, and you talked about the use of the money for growth. And I think people are now, the mindset of people of the business has changed, whereas before they were very much, and maybe I'm going back quite a long time, but again, it's, if I can't afford it, I can't do it. Whereas now people are starting to come to the understanding that if I want to grow and I want to achieve the things that I've got to do, debt isn't a bad thing, especially with the amount of debt, the rates on which you can get on things like that. So it becomes a very inexpensive way to grow your business. If you can grow your business by £1 million, by £1 million worth of profit, and that, you know, if it costs you whatever to get that in terms of finance, then it's a no-brainer, isn't it? So as long as it's matched up in the right way, I think it's a really useful tool. So brilliant. So you talked about the opportunity to have confidential opportunities support there. So there's two major products that are in the market, isn't it? There's invoice factoring and invoice discount. They're the two main things. And I think a lot of people either group them as one or don't really understand the difference. Can you just clear that up for us, just so that if anyone watching, they've got that full inside information about what the difference between the two are?
So really simply, and again from a Bibi point of view, on one end of the scale, you've got factoring, invoice factoring. So that is in effect where we'll become your credit control function. So you'll get a designated credit control that's an extension of your team that will collect the debt if and when we need to collect it by sending out statements, sending out letters, and making phone calls at certain intervals. As well as that, we'll obviously release cash against your invoices, which is the main use, generally speaking, of invoice finance. So we'll release cash against the invoices whilst also administering credit control for you. On the flip side to that, on the other end of the scale, is invoice discounting, where you'll get cash released against your invoices, whether that be a huge lump on day one. As we said earlier, you've got £1 million debtor book and you need a lump of cash for acquisition or for a deposit or for something, £900,000 as a lump, or it's just a general 90% of each invoice as you raise them on a daily or weekly basis for cash flow and growth. On that scenario, invoice discounting, where just in effect, keep it simple, we're releasing cash against your debtor book, against your invoices. Credit control is all left to you. We don't get involved in that whatsoever. You've got to report to us once a month with a bit of information, which our system is gradually making easier and easier and less time consuming. That was one of the things once upon a time. So people used to say, I'd be really interested in invoice finance, whether that be factoring or discounting. It's just too time consuming, so I can't do it. I'm not going to do it. So we, as a company have worked over the last few years to develop software that links in with accounting software to make that workload less and less and less. So if you had an out-and-out comparison to make between Invoice Finance and something else, you wouldn't be making your decision based on that's going to take me a little bit longer to administer.
Yeah, go on. Sorry.
The main two differences are that invoice discounting, you retain control of your credit control. Factoring, we do. For reference, factoring, we offer a product where we can offer a confidential factoring product, so where we collect the debt and administer that as if we are you. Also, there's something in the middle of the two. So you perhaps don't want factoring, but you maybe not quite set up for invoice discounting as yet. So there's something in the middle of the two, where in effect we tailor it to say we can step in if and when we feel the need to, or you feel a need for us to do so. But otherwise, you do the credit control, really. We get involved very, very little. So I guess what I'm saying is they're the two extremes.
And you can do everything in the middle.
But you can kind of meet in the middle. Yeah.
No, that's brilliant. That's brilliant. That's good. I think that'll probably put a lot of people's minds at rest if they're kind of sat and considering what options they've got right now, because I know a lot of our clients do have substantial debtor books and do trade on long terms, especially in the construction industry and those kind of things, and the manufacturing and the engineering, all those sorts of long lead times in terms of your debtor days. So that might be quite useful to them. So okay then, so we talked about the perception of it. We've talked about the different products. So why do you think it's best to use these sorts of products?
So I guess what we've said, we've covered some of it off already, but cash flow, people will use Invoice Finance for growth. Using a really, again, simple comparison, and it probably becomes less and less relevant nowadays as it's more and more difficult, we find, for people to get a bank overdraft. But if you compare it to that kind of, let's say, static or more static finance line, so you go into the bank and you get 100 grand overdraft, that might seem, and it may well be, the right option, and it might be more than enough cash today. If your business that overdraft is going to stay at £100,000, you're going to hit up against it. You have to go back and ask for more. The bank might then get to the stage where they say, we can, but we need some secondary security, that generally being a property. With Invoice Finance, really simply, if you're a growing business, if your debtor book today stands at £100,000, you're going to get, in the example we've used previously, access to £90,000, and you're going to get access to 90% of your invoices every time you raise them. As your turnover goes up and up and up and up, your debtor book's going to increase. The amount of cash that we release is going to increase. So keeping it really simple for growing businesses, the debtor book goes up in line with your growth. The access to cash goes up in line with that. We'll give 90% of whatever your outstanding invoices are. And unlike the scenario we've just discussed, because you're asking for more and more cash, we don't all of a sudden think we need to think of some other security here as well to give us a bit more comfort. The debtor book is the security. This is a big, big thing for people. The debtor book is a security. As long as we're happy with funding your debtor book at 90%, if your business remains the same, your invoicing remains the same, whether we're putting £90,000 out or £9 million out, we can put up to £15 million out to any individual customer. Really, we don't treat any differently if we're putting 150 grand or 15 million out. If that is factorable, discountable debt, we're not going to ask you for any extra security. So you're not going to be putting your house on the line or your business premises on the line. You're going to be getting access to more and more cash as you continue to grow. So growth is a big one. And, to cover off something we said before, Invoice Finance is used by some huge, huge, huge PLCs. We will fund everything from a new start to long-established business, a sole trader, through to a PLC. So there's no kind of lines there drawn. On the flip side of that, you've got your growing businesses. We do come across those businesses where they may be having cash flow difficulties, and that could be of varying extremes. It might just be a temporary blip where they really need access to some cash to get the creditors back in line. We can help there. Same premise applies. We'll release cash from your debtor book to help you get back in line. help your cash start flowing a bit better. So it could be a little bit of a cash flow blip, or it could be, again, we will look right at the other end where you've got someone that is maybe in real difficulty and you might be in a turnaround situation. It will help at that end of the scale as well. The premise is always the same. We're looking to help cash flow, and we always base it on debt and debtors. What do your debt and debtors look like? If your debt and debtors are fundable at 90%, they're fundable at 90%, whether you're a rapidly growing business that's flying high, or you're a business that's having a little bit of a tough time and needs someone to hold your hand and help you. And we step in a lot there where others potentially won't. They'll look at the upwards, but not always the downwards. We'll look at all levels, which, I think is one of the reasons why we're so successful as a business, because we don't draw any lines there and pigeonhole, say we only want this kind of business. Debtor book is a valuable asset in your business, and we want to help wherever we can. So I would say those two, and then something that we're seeing a lot more of at the minute, and I can't quite put my finger on why especially, but we do a lot of acquisition, MBO, MBI. I've got a big share purchase on at the minute. It is a valuable asset, again, like I say, in the business. So the one we're looking at the minute, it's about £2 million is the purchase price of the business. They've managed to raise some cash in certain means. They've got some of their own cash to put into the equation, but there was a hole around £500,000, and their advisor said, have a look at Invoice Finance. It's a really long-established business. It's a fantastic business. It's got £1 million balance sheet. Does really well. It's been going for a long time. Again, being honest, initial reaction from the guy was not interested in that. Can we look at other avenues? So what I would suggest, and I've probably said this to you before, Phil, the introducer, the advisor at that point mentioned it to me, and I said, listen, it's up to them. My advice would be, let's look at it now and see if it's an option, and then he can worry about whether he wants to use it or not. But if we leave it until you've exhausted everything else and it comes to us and it's either not an option, or we can't raise £500,000 out of that debtor book for whatever reason, where do we stand then? So come and ask us now, give you an option, and then worry about whether you want to do it or not. But in that scenario, it is going to work. We are doing it. And again, it sounds like we're telling stories, doesn't it? But genuine, this guy couldn't have changed more from the first conversation to now, where he sees it as a great idea. And I think in a way, wondering why I didn't look at it before.
It's just education. Education and awareness.
And I think it is that, Phil. I think it's, and I'm sure you get it in your industry as well, there'll be certain little things that, for whatever reason, people don't educate themselves on it. But I always say about Invoice Finance, why would you necessarily educate yourself on Invoice Finance unless you needed to? It's not exactly the most interesting subject in the world to be chatting about with your friends down the pub. So you wouldn't necessarily know about it unless you needed to. And the little snippets that you may know about it will probably be outdated, old-fashioned, and/or incorrect. And I can honestly say, from that 14, nearly 15 years experience in this industry, 100%, most of those niggles that you finally get to with the prospective client, what is it that makes you so against Invoice Finance? They're nearly always wrong.
Yeah, we have the same issue with things like R&D and things like that. We've had a huge push on R&D this year, and I think we've claimed about £2 million worth of excess tax relief, just because of having those conversations with people and people being more open and susceptible to those conversations, whereas before they'd just dismissed it. Whereas now it's, we'll talk about it because they need to, because again, they were talking about freeing up cash. And this could be a conversation that puts a lot of money into the bank account. We had a conversation with a client the other day. 50 grand dropped into his bank account the other day. Within 28 days of us putting the application in, 50 grand, it was just like, what? And what did he have to do? Well, he did have to spend half a day with me, and then I had to write a report. But even my company's worth 50 grand for half a day. So he was quite pleased at the outcome of it. So yeah, this is, like you say, it's just education and awareness, which is good. So, I mean, I was going to ask you one of the questions, which was, how is it best to use Invoice Finance? But I think we kind of covered that. So is there any particular ways that you wouldn't suggest using Invoice Finance?
I guess because it does track your sales ledger, your debtors. You know, if we saw a business that was on the decline, as in not as I spoke about earlier, in a turnaround situation where it needed help, you know, if turnover was just declining and declining and declining, that's not necessarily the right time to use it, because we're going to be generating less and less and less cash
to repay it.
Yeah, so, you know, and again, we've probably had this conversation before, but kind of harping back to something I just said a minute ago about, you know, let's give you an option and then worry about it. It's probably the same as you just said about R&D there. You probably don't fully understand it, because why would you? Give you the option and then let you worry about it, because we're not going to go on every occasion and say, this is what we can do. So if you want to do it, sign on the dotted line. You know, my job is to give advice, present an option that meets the needs of the client, and then let them decide whether they want to do it or not. So if we look at, and there's not loads, to be honest, but declining turnover is definitely one. If we saw that, we wouldn't say, well, we'll offer a facility and it's there if you want it. You know, our advice through the likes of yourself, whoever the advisor is, would be, listen, this really isn't going to work. We could technically put something in place, but it's really not going to work for these reasons. And they're actually probably better looking at either this kind of funding or speaking to some other kind of advisor, like Martin that you spoke to last week, because or a couple of weeks ago, because it's, you know, it's not always the right answer, is what I'd say. And if we don't think it is, we would give our honest answer and say it's not for us.
No,
and that's not right for you.
And from an advisor's point of view, it's good to know that, you know, I knew that anyway, but it's good for you to go out there and say that, you know, you can trust the advice. It's not just about, let's get it over the line, let's just make some money off the charges and the interest and sod the rest of it. You are looking out for the genuine interests of the business owners, which is one of the common themes that everybody who's been on this sort of session has talked about. That even the insolvency guys, they're looking to resolve the situation in the best way for the business owner. So I think that's massively important as well. So that's good to know, to give confidence.
And it kind of rings true with what we said before, Phil. You know, we're, you know, largest player in this market, independent market. That can only happen by looking after your customers. You know, we're big on Trustpilot, and our Trustpilot rating is 5-star, and client satisfaction scores. You know, these clients telling us what they think about us. We ask them for honest feedback through a third party are really high, and much higher than the bulk of our competitors. It's about treating the customer right. So it's not about, and you'll know this with your business, I'm sure your clients will know this with their business, just getting someone on the books for the sake of getting someone on the books doesn't do anyone any favors, because all they'll do is they'll kick and scream, tell everyone how much they dislike you, and it's actually detrimental in the end. So for us, we want to bring a client on that needs us, that wants us, that understands the benefit of us, and will stay with us. And our longest client's been with us since 1989 now. So it's you know, we want people to stay with us, because again, as a business, we make money the longer they stay with us, and they'll do that by having a good relationship with us.
Exactly, because all the kind of swallowed at the start, isn't it? And then it just becomes an ongoing service facility. We're exactly the same. You know, to bring a client on costs us quite a lot of money. It's not something you can pass on to the client, but it does. And then so you don't want to be doing that all the time, because basically all you're then doing is paying people an admin process just to recycle stuff all the way through. So like you say, it's about bringing the right people on at the right time, which is good. So I was going to ask you about which products are best to use and in the different scenarios, but I think we've covered that already when we talked about the description of it. So I'll scrap that. Talk to me about the application process and the timescales, because again, a lot of people have sat there and have seen what you've had to say. It'll have pricked some interest. They'll have a little bit more understanding about the different products, about why to use it, how to use it, what best to do with it. So then it comes down to the question is, well, you know, is the application, what's the application process? What's the timescales like?
So for us, we can and we have and we do turn new facilities around in 3, 4, 5 working days, where you know needs must, and it's kind of time critical, and that'll come through having a local office network. So every region pretty much has a local office. Ours is we've just moved into Leeds City Centre, so all our Yorkshire-based clients pretty much we manage from there. So because we've got these local offices, that is where we sit, where the credit controls team sit, where the relationship manager sits, where their assistant sits. So you get a team of 3 people looking after you, but also the underwriters sitting there, the risk managers sitting there. So we can literally go see someone on a Monday, and we can put that file into underwriters the same day, sometimes the following day. We'll literally put it onto their desk. It's not sending it down to a central office somewhere, and they'll look at it straight away and turn it around. Legal documents are all produced from our office locally. Obviously, at the minute, we've been doing this all remotely, so in some ways it's been even quicker at the minute. Everything over video calls, documents being sent out through DocuSign, witnesses can witness the documents remotely. So it's been even quicker. But yeah, everything is done through the local office, and that's a big selling point for us. So we can turn stuff around. I would say we can definitely do it, and we do it in 3, 4, 5 working days. Generally speaking, it's a couple of weeks.
Yeah, well, that's brilliant. When if you think about starting with the banks, it can take you a fortnight to have a conversation, then a fortnight for them to come back to you, then 8 weeks for an underwriter to come and ask you a question, then 6 weeks for them to respond to that question, and before you know it, it took 6 months, and then they say no.
You know? and I've been there and got the T-shirt. You know, I've seen that where I worked previously, and it's not their fault. That's just how they're set up. And a standard reaction for them would be to say, "We've had it. We've got one right now." Which I won't name the bank, but we're one of the high street banks, and they just said, "Listen, we will not be able to transact as quick as Bibi will. We're just not set up to do it."
Which is again testament to what you guys can do. So I'm almost coming to the end. I've got a couple of questions left for you. I want to talk to you about why Bibi's differs, and then I'll talk to you about that. So why does Bibi differ then to the high street banks then? Because you're writing 1 in 2. I write it down. 1 in 2 deals outside of the big banks.
That's outside
the big 4 banks. That makes you a huge player in the market. So what are the key differentials when someone is thinking about invoice finance and they look at Bibi's as a comparative?
Again, there might be a bit of repetition here. Apologies if there is, but I think it's a lot of the stuff we've said. So the local office network means that we can be quick and slick and reactive, and jump straight on things. And if it is time critical, there's not going to be anyone that can transact as quick as we can. We're really flexible. So again, we'll look at all the stuff that the banks would like to look at, the vanilla deals as we call them, and everything from there right until the kind of scenario of someone that needs a little bit of a helping hand and that's struggling. So the full spectrum, always based on debt and debtors. So we're flexible, we're quick, we're reliable. Clients like us, and they tell us that they like us through those various mediums we spoke about, Trustpilot and our client satisfaction scores. So they stay with us. It's a personal family feel with it being a family-owned business. And then some kind of specialist bits as well, which we've not touched on. Construction finance. I know some of your clients are in that sector, Phil. You know, that's our baby. So construction finance was born about 16 years ago now, I think. That is a Bibi product. We invented that. You know, we came up with it. Before that, the general rule of thumb was you can't help construction. I'm sorry, we don't deal with that because you don't raise invoices, you raise applications for payment, you raise stage payments, you work under these big hefty contracts that basically say we won't get paid in certain scenarios. So I'm sorry, it just doesn't work for that industry. So we saw a bit of a niche there and spent a lot of time developing a product alongside some QSs that we work with still that evaluate contracts. So construction finance is our baby, that's our product. Anyone else that does it, and there's very few that do, are trying to copy our product. Trade finance, purchasing, not necessarily from overseas. We do have people that purchase from the UK, but generally it's people purchasing goods from overseas, so we can get involved in trade finance. Exports. Some of our competitors we do export, we'll fund overseas debts, but as long as it's no more than 30% of your turnover, that's one you hear quite a lot of. Well, what if it is more than 30% of my turnover? So we don't put a cap on that. You know, we'll put 100% export, and the trade finance, purchase finance, and the export finance are complemented by our own foreign exchange boutique that we've got.
Yeah.
And then other little things, you know, I say little things, but you kind of forget, or I forget from working in a bank for that long. Single debtor, you know, you've got all your eggs in one basket. You work with one customer only, or 70% of your trade is with one customer. A lot of people won't fund that. We do. We're not particularly bothered by that. So high concentration, high involvement, just flexibility. And I would sum it up by saying, if you're a business that deals with other businesses, it's worth a chat because we'll try and find a way, if you need it to work, to try and make something that works for you. And no matter what, no matter if it's overseas, no matter if it's all eggs in one basket, no matter if you're flying high, if things are not so great at the minute, we'll make something work for you. And I think that's why people like it, and that's why we continue to grow.
Excellent, excellent. So I'm kind of coming to the end of my questions. I've got one left. So is there anything else that you would like to cover that you don't feel that we've got across in this conversation so far, or anything like that?
I don't think so, Phil. I might at the end of it think so, but yeah, we've covered everything off that I kind of wanted to get across. And it's just to say, really, for your guys and people that are watching, you know, if you want to have a chat through things and find out what your options are, whether that is a 30-second phone call to say, actually, it wouldn't work for you because, what I'll always try and do in that scenario is say, have you thought about this? Because that might work for you. I'll let Phil know. Phil can help you with it in that scenario. But
you've done that a lot, to be fair. You have done that a lot where we put stuff over your way and it's like, it's not really right for you, but what have you thought about X, Y, and Z? And they've come back to us and then we've moved it on to other areas. So yeah, it's good that.
So I would just say, you know, if you want to have a chat, you think it might be of use, you think we might be able to help, all we're going to do is present an option that you can then sit and think about and decide whether it's right for you either now or in the future. But, you know, we're here to help, really. And yeah, that's it.
Yeah, and to be fair, that covers my last question. Was going to say, what would be your advice to anybody that is sat there watching this and thinking invoice finance might be for me? But I think you've covered it up, like you say. You're going to present an option. You're going to look at the scenarios, and like you say, it's worth a conversation. So I take it that would be your advice. It's pretty good advice, in fairness. So right. Brilliant. Well, I haven't got anything else to cover. I think you've covered more. I've learned stuff in there, which I thought was excellent. So unless you've got anything else you want to put on, we'll start to wrap it up. No.
Yeah.
Brilliant. Well, then all that leaves me to say is a big thank you to you, Ian, for your time this morning. I know you're a busy guy. I do appreciate it. Next time on Moretti and a Catch-Up, we're going to continue the theme about releasing cash. And obviously, Ian's talked about debtors and things like that. So we're going to talk about the other major asset on the balance sheet. We're going to talk about asset finance. So we're going to talk to James Robinson from Next Asset Finance, who's an expert in that field as well. So that'll be coming in the coming weeks. So basically looking forward to that. And once again, Ian, thank you very much for your time.
No problem.
Cheers, mate.
Cheers.